In this video, guys, we're going to look at taking the range breakout trade setup. Stay tuned. Hey traders, a very warm welcome to you. Thank you so much for joining me on the channel. If you're not a subscriber, maybe consider doing so. You know where the button is. And if you haven't checked out our channel sponsor, guys, in the description below, information there, go and check them out. All right, so what's the range breakout trade setup? So this is a little bit different from some of the stuff I talked about before. This is really when you have a swing trade, so it's daily chart, that is literally stuck in a range. We know what a range is, guys. You know, the market hasn't managed to break out of a high or low, and it's just sat there and it's found an equilibrium. Sometimes these levels, sometimes they're quite wide, the ranges, sometimes they're quite narrow. But in other words, you know, prices ping pong back and forth, nothing has caused it to break out continually. So the trade, I mean, many people will say, well, the key to trading in a range is just to buy the lows and sell the highs. And yes, if you're trading mean reversion, then that's a separate strategy. It's very important to define these as two separate strategies, guys. You know, the range whilst it's ranging and the breakout trade. So yes, while it's in a range, you can guide yourself and say, hey, if it's in a lower part of the range, maybe I'm using some kind of oscillator like a stochastic or an RSI or CCI or something like that to guide the trade as it's rotating back, takes them off the mean, takes them off the highs, play that until it breaks. That's fine, that's something different. What we're talking about now is how to get on a breakout when you break out of the range. So you're in a long range and then this price starts to break out. What do you do? Now, the kind of textbooks may say, hey, you know, what you really do is as soon as it starts to break out of the range here, you buy at this point. Now, the problem I have with that, guys, is that when you actually look back at the range, very often you'll see that it has broken out, had fake outs quite a few times before. And we don't kind of take it into account because when we're drawing our range lines, we just view them as the best fit. Like this one, for example, you know, it's already broken out once here and faked out if you took that as the range, and maybe here it's broken out. So many times you get this scenario, and if you're taking the breakout, then you know a lot of the times you're going to get faked out. You know, to me, it's one of those things that yes, you can overrule that sometimes if there's some sort of catalyst or trigger or an event that causes it to rip through, then fine. You know, I understand why you'd want to jump on that straight away. But for me, I looked at this three-step process. So number one is, rather than us taking it on the break here, number one is to see the break. And then I want to see what happens with that. I'm expecting that this thing just retraces straight back in and it's just a fake out, because that's what it's done historically over the past quarter or whatever period that may be. So we want to see what the retest is. Now listen, if it just rips off and off, then I'm going to have to readjust reevaluate how I want to get on that, if I even do. Maybe it just rips on and on and on and it's gone so far that I'm not interested. Or maybe it rips on and on, I'm looking for 1 or 2 red days to buy for a continuation. But that, again, that's a separate category of trade. That's our drive pullback trade. That's not a range break trade. We've missed the range break trade, but we're using that as a catalyst to say, okay, we've broken out the range, we've driven, we've pulled back, whatever our trigger is for that, and taking that as a separate category. However, with this one, we want to see the break, we want to see a retest. Most of the time we're going to get a retest. Bearing in mind now we're still expecting a fake. We're still expecting it to do this because this is what it's done historically. It also depends on how far it's broken before it retests, of course. What we don't want to see is it breaking really high and pulling right the way back. I'm a little bit cautious with that. So how far does it pull back? Now, again, textbooks will say it pulls back right until that support line, and sometimes it's nice if it does, but it's not always going to do that. It might push up and pull back half the way. But the key is, guys, in this second phase here, we want to see what the retest is like, how far it's retesting, how quickly it retests. Does it have one big day of drive and then take a couple of days to kind of tickle back, but doesn't undo that one day? That's bullish, because 1 day and 2 days and kind of taking back only half of it, that's bullish. And then we want to see what happens after that. Whereas if it does 1 day and just rips straight back up and you get those 2 bars, green and red, next to each other, you don't particularly want that. So again, you've got to read into what's happening, and this is why it's so key to be trying to position yourself for, you know, trying to become, should I say, an expert in this bit. You know, this bit's fine, but it's what happens after a level and everyone's looking, everyone's watching, everyone's analyzing, everyone's positioning, everyone's deciding what to do. It's what happens and how to read the little nuances that happen with that. You know, to me, that's price action. That's what I like to do. That's what I really try to get very, very good at, because I feel this is where my edge is. But you know, this is what you're looking for, the pullback, the retest. Now we're in the critical moment. Where does it retest? What happens on the retest? Because the beauty of this, guys, is that when we start to resume, if we start to resume up, back up, you've got a defined level for your stop loss. And I'm always looking for a place to speculate on the direction of an asset, but with a good, sensible place to come out. I could have the best trade in the world. It looks so good, but if I can't find a decent place for a stop, I have to pass on it because it doesn't fit my criteria. I know that if I take those continually, I'll just end up eroding all of the gains. You have to have a very sensible place for a stop, which is why this is so nice, because you get the pullback. Okay, the break, fine, there's one tick in the box. We get the retest, tick in the box. Now what do we get? If it carries on and fakes lower, we don't take the trade, we're not interested. But we've still got a marker, still got a line in the stand here. If it breaks the high, maybe we do take that on the subsequent break. Maybe now, once it's tested once, we can take it because we have a defined level for our stop. But in the resume phase, which is the most important phase, we want to see what's happening. In other words, let's say the next day, does it start to rally immediately on the day? Does it start to really pick up? Because this is where we can focus our efforts, guys. If you're a day trader, if you're a swing trader, you have these patterns, but then you focus really, really intently when you get this. So it's broken out, aha, my alert. Now I need to watch it for 3 or 4 days to see if I get an actual trigger to take the trade for a multi-day run from a swing trader, or a multi-week run, or whatever it may be. Yes, I get the break. Okay, next day, let me see what happens. Oh, we're pulling back a little bit. Great. Now looking for day 3. We resume. Oh, it's really aggressive off the open. That's when you can front run it a little bit and go, right, well, I've seen some aggression off the open. On a wider time frame, this one is looking good. I've got everything I want. So now on a narrow time frame, my 15-minute, whatever it may be, I'm seeing aggression off the open. Why don't I leverage on that? Take that trade there, work off maybe a stop under there, or maybe half of the low on the intraday low, and think, okay, well, it fits in with the broader thesis, it fits in with the shorter term time thesis, good drive off the open, or good drive whatever you're trading, London Open, Asian Open, if it's a stock, obviously the opening bell, and then trade it from that. And so now all of a sudden, you've got not only a good, kind of solid, fundamentally good trade that is kind of technically correct, for want of a better word. I don't like using that because there's nothing, no right or wrong really, but technically, you know, you've broken out of the level, you've pulled back. This is good stuff, and if we know historically this is how patterns tend to happen, they push into a new area of price, they test a new area of price, then they retrace, and then they go again. That tends to be what happens. So that box is ticked, and plus you've ticked the box where you can express the trade with a sensible stop loss, guys, which is the most important level for it. So range breakout trade setup, and again, flip on its head if it's going to the downside, just use the bullish one for now. The break, yes. The retest, don't forget, if it doesn't retest, it becomes a separate trade completely. Still take it, but it's a separate trade setup. The retest, if it carries on lower, again, we ignore it. So again, we're very careful and methodical about this. The retest, and then the resume. And the resume is where we add a little bit of flavor, a little bit of intuition maybe, a little bit of going into the lower time frames, as we said, to try and pull that trigger, take the trade, knowing we've got a sensible place for a stop, knowing we're backed up by a higher time frame. Anyway, guys, if you like this kind of stuff, a thumbs up is appreciated. Don't forget to check out our channel sponsors. A link to them in the description below, and I think as well as a link in there to my price action program if you're interested in going a deep dive, supply, demand, and all that other good stuff. Otherwise, see you in the next video. Take care, keep your risk managed. Bye bye for now.